A very good evening to all. Welcome to our fourth episode of the currency trading series. And today we'll be looking at the Euro INR pair or the EUR INR, the commonly known as EUR INR pair. So let us get started. Now, before entering into the rigmarole, before entering into what drives the Euro INR pair, let us first look at the participation. Now, in this chart, you will find three different data points. Now, if you see the dotted line chart, that is the monthly volatility, and that is there on the right hand side. And there are two bar charts that are plotted, and one is the futures volume and average daily volume, and another is the options average daily volume. Now, if you see, the volumes have been consistently increasing. Now, this data is from Jan 2017 all the way to May 2022. And if you see, if I was to draw a trend line on the volumes, now it has been rising and it has been a steady rise. And there has been a surge in the participation since September 2020. And that surge has actually continued all the way to May 2022. Now, we'll look at what the price action has been over a period of time, over the last couple of months. Now, this is the daily chart of Euro INR. Now, one might argue that the Euro INR has been in a downtrend, and yes, I totally agree with you. Now, this downtrend actually started somewhere probably in late April or early July of 2021, and ever since then, the pair has been forming lower low, lower high patterns. Now, that as per the technical rules is a bearish trend. Now, if you take a closer look at the chart, now just look at the cursor and around somewhere in the later stage of 2021 and just before April of 2022, if you see, the pair had been finding support somewhere close to 83.40, 83.50. Now that support was actually held a couple of times, to be very precise, one, two, three, four, and five times. And the sixth time, that is probably towards the end of April, there was a breakdown. And ever since the pair broke below that level, we saw some steep fall, some consolidation, and then a nosedive towards 80.50. And after testing 80.50, it managed to recover about 4%. Now, in a period of 12 months, it has dropped by 8%. And from the levels of 80.50, it has managed to recover about 4%. Now we'll discuss what the view is in a later slide. But for the time being, if someone asks you what's the trend of the Euro INR or what it has been over a period of time, then I would say that it has been negative. It has broken below a few crucial support levels. Now let us look at how this quote is actually derived. Now, to derive this quote, you require two data points. One is the Euro USD, another one is the USD INR, that is the Euro dollar and the dollar rupee. Once you have the quotes, that is the Euro dollar and the dollar rupee, it is simple arithmetic multiplication, a product of both those quotes, and then you derive the Euro INR. Now, for example, if you see the Euro USD, currently what we have mentioned here is 1.0716, and the dollar rupee is 77.57, and that is how a product of the two is how we derive this quote 83.13. Now that we have derived the code, let us understand the code. Now, like in all the prior videos, we'll be taking two scenarios, and let's say the CMP or the current market price is 83. So a buyer has to pay 83 rupees for 1 euro. Now we'll assume that Mr. A is a buyer. He has purchased one lot of euro at 83. And in the first scenario, the pair moves higher from 83 to 83.25. So Mr. A, who purchased it at 83, is now in a position to sell it at 83.25. So he is making a profit of 25 paisa. Let us look at scenario 2, where the Euro INR pair actually moves lower towards 82.75. So here, Mr. A, who purchased it at 83, if he wants to sell it today, he will be offered a price of 82.75. He'll be able to sell it at 82.75. So he is incurring a loss of 25 paisa. Now, while deriving the quote, we told that there are two major components. One is the euro dollar, and another one is the dollar rupee to get to the euro INR quote or the euro rupee quote. So here in this table, we'll understand how the euro dollar affects the euro rupee. So we'll take a base case scenario wherein the euro dollar is at 1.0641 and we'll keep the dollar rupee stable at 78. So we derive at our first quote of the euro INR that is at 83. Now we assume that the euro dollar moves higher towards 1.0692. We see a rise in the euro rupee that is at 83.40. We take another step, it moves higher towards 1.0717 and we see another increase in the euro INR that is 83.60. Similarly, we'll assume that the euro dollar moves lower from 1.0641 to 1.0615 and we'll see that the euro rupee actually moves lower from 83 to 82.80. Another negative tick towards 1.0589 and we see the euro dollar actually move euro rupee actually move lower towards 82.60. Now if you see, there is a direct relation between the euro dollar and the euro rupee. So if the euro dollar was to move higher, the euro rupee will also move higher, and vice versa. If the euro dollar was to move lower, the euro rupee will also move lower. So this is a graphical representation of what we saw on the chart. Now this is that bit more elaborate. Now if you see, there are two charts available here. One is the one is the red line chart, that is the euro rupee. The blue line chart, that is the euro dollar. Now if you see from the start of the chart, as the blue line rises, that is the euro dollar increases. That is, the euro actually becomes stronger against the dollar. The euro also becomes stronger against the rupee. And when the euro becomes weaker against the dollar, the euro also becomes weaker against the rupee. Now ignore the slight niggles here and there. Just keep your eyes focused on the major trends. So when the euro dollar moves higher, the euro INR also moves higher. When the euro dollar moves lower, the euro INR also moves lower. So we can conclude that most of the time the euro INR and the euro dollar and the euro INR, they move in sync. Now we look at the contract specification. So the lot size of the euro INR pair is 1,000 euros. So when we assume that Mr. A was purchasing one euro, if he is purchasing one futures contract, he has to purchase 1,000 euros. The tick size and the tick value, like all other pairs, is 25 paisa and 2 rupee 50 paisa respectively. The trading hours are weekdays 9 a.m. to 5 p.m. The expiry of the first month contract is at 12:30 p.m. on the third last business day, and the settlement is as per the RBI reference rate. Okay, now we have derived the quote. We know how the euro dollar actually affects the euro INR. We know the contract specification. Now let us focus on what moves the euro INR. So we have tried to sum it up in 5 points. So for starters, I mean the chronology doesn't really matter. All of them have equal weightage, slight give and take here and there. But the data points, we have tried to sum it up in 5 points. So first would be the economic data. The next would be the dollar index movement. The third would be the yield differential. The fourth, this is more of a current scenario, so that is the Russia-Ukraine war. And the last point is the comments from the ECB members. So let us dig a bit deeper into every single point. Now we'll start off with the geopolitical developments. Now one might ask, what are geopolitical developments? So it is basically political controversies or issues that are happening between two countries or two different geographical borders, beyond the geographical borders to be very precise. Now, in the recent past, if you have been focusing on the news, if you have been tracking whatever is happening around the world, you know that Russia and Ukraine have been at war. Now, why that happened, it is beyond the purview of this video, but this is something that has been happening and this has been affecting the euro big time. Now, let us explain or let us look into why that is happening. So ever since Russia invaded or say declared a war against Ukraine, had been attacking Ukraine, uh, other than the unspeakable things that the Ukrainian people have been through, there have been effects on the world uh, per se. So Eurozone or Euro area has been affected on a very big scale. Now, how is that? Russia is a major producer of oil. It is a part of the OPEC plus cartel or the oil cartel. Now, ever since Russia and Ukraine, ever since the war between Russia and Ukraine started, most of the European countries started boycotting the Russian oil. Now that led to an increase in the price. Now, along with that, many shipping companies were transporting oil via sea route stopped taking Russian oil or stopped carrying Russian oil. And any Russian carriers that were actually carrying oil were actually intercepted by the US when it entered their uh, coastal areas. So this led to a massive void in the supply. This has actually increased the supply constraints, has created more and more supply side pressures. So that is why if you take a look at the crude oil chart, the rally from 100 to 120 has been really fast, and that was actually triggered because of the Russia-Ukraine war. Now, and another thing is, Russia was another was a country that was actually exporting fertilizers. Now, even that has stopped. So, it has been stopped or it has been boycotted by most of the countries. So that has actually increased the input cost. Now, all these factors have increased the input cost. Now, this has happened across the world, but Eurozone was very much dependent on Russia for their oil and natural gas supply. So oil and natural gas are a part of the, or majorly are the energy part. So Eurozone was basically dependent on Russia for energy. And ever since they have been on war, Eurozone has been trying to boycott Russian oil in one way or the other, and or trying to reduce the import of oil from Russia. So what has happened is because of that, they have to import oil from other sources, and that has led to an increase in the input cost. That has put pressure on the manufacturing companies. But these manufacturing companies cannot really pass on the cost because of tighter economic conditions, and in one way or the other way, it is either affecting the industrial output, it is actually affecting the industrial output, which is indirectly affecting the job market. Now, these things put together is not actually very good for it, is a very bad scenario for the Eurozone. Now, that was another reason what triggered the fall that we saw. Now, bear in mind, it has been more than 100 days, I believe. The Russia Ukraine war started probably on the 24th or 25th of Feb, and it is still going on. And all these things are actually, in a way, weighing down the Eurozone's industrial production or the job market. And if you even look at the inflation rates, that they are off the roof, the energy prices are off the roof, the electricity charges or the heating charges, they are all off the roof. So that was the geopolitical development. Now, the geopolitical developments need not be the same. The effects might be different. The effects of all these geopolitical issues might be different, but this is what the current scenario is, and this is what has been happening because of the Russia-Ukraine war. Now we'll look at the yield differential and the Euro INR. So yield differential is basically the difference between the Eurozone 10-year yield and the US 10-year yield. So the blue chart that you see, the blue line chart that you see is basically the differential between the Germany and the US yield. So here, if you see, the rate is negative because definitely the US 10-year yields are much higher than the German 10-year yields. But in this chart, we'll actually understand how the yield differential affects the euro INR. So if you see, they mostly move in tandem or they have a direct relation. Now, if you see from the start of the chart, as the blue line falls, now here also I would advise you to take a look at the bigger picture rather than focusing on the minor niggles here and there. So ever since the differential has been falling, that is the difference between the German yield and the US yield has been widening. The euro has been becoming weak against the rupee. Now this is very clear since I believe 2021 November 2021. So if you see the differential increased, that is it fell lower towards 1.90 I believe, and the euro INR also fell. That is, the euro was weaker against the rupee. and vice versa as it started moving higher. Now, this is actually very clear towards the end of the chart. Now, if you see, there has been a sharp rise in the differential chart, that is the European bonds are actually catching up to the US bonds. I mean, the differential is actually reducing. So that is actually making the euro stronger against the rupee. Now, next factor is the dollar index. Dollar index is basically the performance of the dollar against a basket of currencies. So euro is one of the major components there. So as the dollar rises, the dollar actually becomes stronger against a basket of six currencies. Now euro being the leader in the dollar index, it actually becomes the dollar actually becomes stronger against the euro too. Okay, so that is why as the dollar index goes higher, the dollar index becomes stronger against the euro and the other components. That is why you see an inverse relationship, and you see the euro INR actually falling as the dollar index moves higher, and the euro INR rising as the dollar index moves lower. Now, the central bank tone. Now, the European Central Bank, or most commonly known as the ECB. So, during this pandemic, during this pandemic, most of the central banks had gone from tight or hawkish views to accommodative or easing or the quantitative easing. So they were basically injecting money into the economy. But if you look at the current scenario where the US or the Fed is actually increasing the rates, at such times, if the ECB members come and they have a hawkish tone, or if they raise the interest rates of the ECB, I mean, of the if the ECB members happen to increase the interest rates, the effect on the euro INR will be positive. That is, the euro will actually be stronger against the rupee, and vice versa in case if they sound dovish and if they reduce the rates. Now the economic data. Now you can pause the video here, take a look at the economic data. Explaining every single component is actually beyond the purview of this video. But these are five economic data that you could track on forexfactory.com, and there are also the frequencies that you have in the middle column. So you can pause the video here, take a look at all the economic data that we track. Now next. Now we know, what drives the euro rupee, how it is derived, and all other things. So let us look at how can we trade. Now the currency is a derivative product. So you have two instruments, that is options and futures, and in options you have calls and puts. Now the options are not very volatile. I mean they have very less liquidity, and if you look at the futures, now this is the chart that we had shown you earlier. And if you see here, the futures have the highest volume, and the options contribution is actually fairly negligible. Now, this is despite an increase in volatility over a period of time. So, what we would advise is rather than looking at options, you should actually focus more on the current month futures contract because of the liquidity concerns that you just saw in the chart. Now, Now that we know, how I can trade, we will look at where to trade. Now, you can visit our website, www.kotaksecurities.com. If you don't have a trading account, do open a trading account, log in with your credentials, and you can create a watch list like I have created here. Now, under currencies, if you see, I have the euro, the GBP, the yen, and the dollar. You can create a watch list, something like this, and you can start trading. Now, if you're reluctant to use your browser, we also have our applications on both iOS and Android. You can download the application from the respective Play Store, and you can actually start trading in the currencies. Now we look at what our view is. So if you remember in the earlier chart, I showed you the multiple touch point level that it broke below. Now the multiple touch point level came at about 83.40, 83.50. Now in technicals, there is a term or a phrase, I would say, that the previous supports will act as resistance once it is breached. So if you see, there have been five touch points here, and the sixth time there was a breach. And after the breach, the fall was sharp. Though euro was quick to recover from its lows of 80.50, it failed to breach above the 83.40, 83.50 mark. So now this is the key level to watch out for the euro INR. Now, as long as we don't see a breach above this, we cannot expect an up move. But if it manages to move higher, only then we can look at fresh long positions, or else every test of this level can actually act as a good shorting opportunity. So for the time being, we would consider this the 83.40, 83.50 zone to be very crucial for the euro INR. So I hope you all have enjoyed the video. I hope you all are subscribed to our Telegram channel, that is Currency Corner by Kotak Securities. And if you are not, do subscribe to our Telegram channel. We keep posting updates about various currencies, and we keep posting information about all the yield differential and all the geopolitical developments that have been happening, how it will affect the currency. So do follow our Instagram channel, and do follow us on YouTube, because we will be will be posting more videos on currency trading. So I hope you all have enjoyed the video. So that's all for this episode of currency trading. We'll meet you all again in the next video. Till then, stay safe, trade safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.